let's get started. A very warm welcome to everybody who joined our online event, Issuing Assets on Chain, Practical Insights of Tokenization. I'm very happy to be welcoming you all. We've been planning to do such an event for quite some time now, and we planned to do it in person, of course. But due to the corona situation, we've decided to turn this into an online event, which, given the circumstances, we think is a great opportunity to connect with so many of you. But certainly also, after corona is over, we will repeat a similar event in person, most likely in Berlin, and where we will be connecting personally. But today I'm very happy to have the opportunity to welcome you all online. What we would like to do today is talk about practical insights from tokenization. And I will give a short introduction before I'll hand over to Michael Pincus, who is the CFO at Bitbond and who will be moderating a panel discussion with great speakers who will introduce themselves as the panel starts. In my introduction, I want to talk a bit about why do we actually care about tokenization? And why is this a phenomenon that we spend a significant amount of time on? Well, if you look at the development where tokenization is coming from, it's basically coming from cryptocurrencies. Bitcoin, of course, was the first one, which got released in January 2009. So it's not an entirely new phenomenon anymore. However, there has been a lot of developments over the past years. At the beginning, it was mainly the crypto space growing and new cryptocurrencies coming. Then the first tokenization efforts where people started to tokenize assets other than native cryptocurrencies was the ICO wave, which kind of picked up in 2016. However, there were a lot of problems related to ICOs, many of them regulatory and compliance related. And that's when a new wave started to emerge, which is the tokenization of securities and of regulated financial instruments. And Bitbond has played a significant role in this development. We were in the very lucky situation and in the fortunate situation last year in 2019 to launch successfully Germany's first security token offering. And of course, since then, a lot of good things happened and the whole tokenization space took a very strong development. I just want to highlight two or three key points here. The regulatory environment in Germany has changed significantly for the better. In September last year, the German government released its blockchain strategy, where one of the major goals of that blockchain strategy is to make electronic securities possible, because right now it's only certain types of instruments that can be tokenized under the current regulatory environment. However, the government has the goal to make all securities technologically neutral. And this goal has been put out last September, and it's currently in its implementation. And I hope that over the next 1 to 2 years, most of the securities actually will be able to be tokenized, which is a huge step. And considering that Germany is, a significant economy, especially from a European perspective, I think it's great to be playing a leading role also in the regulatory environment. And the second thing that happened, and this is something that has already been implemented, that is the reality today. Since the beginning of this year, the provision of custody services for third parties of digital assets has become a financial service that is regulated, and it is already part of the German Banking Act. And with that, many institutional players started to get even more excited and getting their hands dirty with tokenization. One other example that is showing the relevance of tokenization is simply the trading volume in digital assets. About 2 years ago, the daily trading volume in digital assets was around about 30 billion euros per day. And this has increased fivefold to right now around about 150 billion euros in daily trading volume in digital assets. However, what's important is that nearly all of that volume is still coming from cryptocurrencies. The role that regulated tokenized securities, funds, tokenized equity play in that trading volume is still minimal. It's even hard to measure. However, that's going to change. We are very convinced that over the next 5 to 10 years, most of the conventional asset classes will be tokenized and will exist in some way or the other on a blockchain or some form of distributed ledger technology. And this shift in markets, which I believe makes us to be in one of the most exciting times when it comes to financial technology ever, is the reason why we care so much about tokenization and why we are so excited about the sector. And it's, of course, not a phenomenon that's just happening somewhere out there, but we want to be part of it. And fortunately, we're not the only ones, but there are many other market participants that are just as excited as we are, and that are working together with us, with companies like Bitbond, to get practically involved in tokenization. At Bitbond, we are caring mainly about 3 technological components. One is the tokenization of assets, so the creation of tokens that represent ownership. The second point is the custody technology that is required in order to provide custody services of tokenized assets. And the third point is to bring payments on chain to make payment processing as seamless as email. And with these components, we work together with our partners and are developing practical use cases that are increasing the efficiency of securities origination, of securities trading, of secondary market liquidity, and many other aspects that are getting vastly improved through tokenization. And some of these use cases we want to discuss with you today, because looking at the technology itself is by far not as exciting as if you look at the actual use cases and the value that technology delivers on a day-to-day basis within financing and within investments and within the financial services space as a whole. And I'm extremely happy that many industry leaders joined us in this session today in general, and in particular our panel participants. And with this, I'm handing over to Michael, who is the CFO at Bitbond and who will be leading the discussion today. And I'm very excited to hear about what our panelists have to say and what kind of use cases we want to discuss. Therefore, thanks again for joining, and I hand over to Michael.
Thanks, Rodko. I'm also very interested to hear what our panelists have to say as well. Good afternoon, morning or evening, depending on where you are, to everyone. My name is Michael Pincus. And as Rodko mentioned, we're fortunate enough to have 3 very prestigious panelists presenting today with 3 very different use cases for how tokenization can be used in financial markets. Representing the investor view, we have Paul Mehta, the issuer's view, Rose Carmichael, and the banker's perspective, Philipp Doppelhammer. And we hope at the end of this conversation, you'll have a better idea and hope that we can bring more light on how blockchain creates efficiency, liquidity, fungibility, transferability, access to new markets, speed to market, visibility, and maybe some other topics as well. So we encourage participants to ask questions. We will be collecting questions in the question portal that you see on your screens. And at the end, we'll save 10 minutes to address those questions, as many as we can. So without further ado, I'd like to introduce Paul Mehta, who's Global Head of Loans at Aberdeen Standard. And Paul, could you maybe tell everyone about your background and about your business?
Yeah, thank you, Michael. Thank you, everyone. Very excited to be here in what I think is a really exciting development for what I focus on, which is the credit markets. And that is my career, always focused around loans or high yield bonds, whether that's being leverage finance, project finance, in a various number of banks as an underwriter and as a trader. And then latterly, as Michael said, I'm now heading up loans at Aberdeen Standard, and we are I'm sure as you know, a investment house, about 500 billion AUM. Of that, 100 billion is about in fixed income, and then slice it down further, about 5 billion in private credit, which what I focus on, leverage loans, non-investment grade loans, would fit actually straddling both fixed income and private credit. And yeah, very excited to talk to the other panel members on this development, which is very much needed in the loan market.
Very much. From the issuer side, we have Rose Carmichael, Chief Strategy Officer for IQ International. Rose, can you tell us a bit about your background and also about IQ International, please?
Sure. Michael Redloff and fellow panelists, thank you so much for the opportunity to be here today. This is really exciting to join you and talk to you a little bit during these trying times. It would be nicer to be in Berlin, I can tell you for sure, since I lived in Germany, and Germany is sort of like my second home. My background is in a lot of corporate finance, mergers and acquisitions. I worked for Siemens many years. That's why I lived in Germany and was there during the fall of the wall. I'm currently with IQ International, and we are a multinational sustainable technologies company. We're headquartered in Zug, Switzerland, and our North American operations is in Scottsdale, Arizona. I'm here in Michigan because my kids are here. IQ is a company that has a portfolio of 66 international patents and 31 patents pending. We have some exciting technologies that really change a traditional industry in batteries and power storage, both for automotive, transportation, and industrial. We are interested in tokenization and this particular vehicle as a way to raise money for our expansion. We're moving our business model from licensing our technologies to other battery manufacturers to branding our own. We have some acquisitions identified, and we'd like to be using the raise in order to achieve that. So I can go on and on about batteries and and our company. So Michael, you have to stop me. I'm a chatterbox. I'm a New Yorker, so I can talk on and on.
Well, you know, in Germany, because so much of your business is automotive-based, you have a great audience here because the majority of the people that have dialed in are German, in fact, German. And when it comes to the auto industry, Germans are incredibly passionate. So
I love it.
Off there, we'll come back to the introduction. Great. So and then Philipp Doppelhammer, Managing Director at Bankhaus Bondeheit. Can you tell us a bit about your background and your business at Bankhaus Bondeheit?
Sure. First of all, I would like to thank you, Michael and Rodko, for giving me the opportunity to participate in this panel. As you already mentioned, we are a privately owned bank that was founded in 1754, so we have quite some history. We come from the traditional wealth management, private banking background. But a couple of years ago, I think in 2017, we decided to switch and move more into the institutional business. This is why we are focusing today on institutional asset servicing. We maintain our own Luxembourg-based management company that sets up and administrates investment funds and also alternative investment funds. And the other division that is one of our core businesses is also based in Luxembourg, our own white label securitization platform. In this area of our business, we focus on getting real assets, making real assets bankable, and setting up structures for institutional investors that will allow them to easily invest in any kind of real assets. So I think this is also the link for us where we started to look into tokenization, as we see it as a very good way for us to enhance our business division securitization and to gain some digital track, so to say, and bring our securitization business to the blockchain. It's basically our motivation. And therefore, we are working with Bitbond and are basically planning on offering all the three modules that Radko mentioned in his introduction, which means we offer tokenization as a service, we offer crypto custody solutions for our business partners, And as the third service, we also offer payment solutions to facilitate fiat payments to chain and back.
Great, Philip. While we're still on you, I think it'd be helpful for participants to hear how and why you decided to bring blockchain firstly, initially into your securitization business, and are you guys considering a full service digital bank?
Mm-hmm. Yeah, sure. So maybe to start with how we got into blockchain and tokenization. Our first touch point was also in 2018 when one of our securitization customers asked us to issue a very simple crypto tracker certificate for them. So this was the first time that we got in touch with the topic, and we set up the vehicle, but we're not really able to pursue public sales and stuff like that for this vehicle, as at that time the German regulator and also the Luxembourg regulator, they were open to the technology, but there was basically no regulatory framework. So we always stayed on that and try to find, try to work with the technology. Mainly driven out of the fact that we are a very small bank, and we are usually very much dependent on other intermediaries when we issue securities. So we always have to work with clearing houses, other banks, and also other market participants that kind of slows down our issuance process because you need to have a lot of interaction between those parties. And we usually aim to have a standard security ready to invest in maybe maximum 4 weeks. And if you have to go back and forth between all those players, then it's usually double or triple that time. And this costs us money and also our clients. So this is our motivation. We always try to look for new ways, how can we replace those intermediaries? How can we act as a one-stop shop issuance house or banking house, and do everything by ourselves that in the traditional world is done by other players. So when it comes to this is how we started, trying to substitute our securitization as a service business with tokenization as a service. And therefore we started out with you guys, with Bitbond in 2019 to set up a tokenization module. And in the course of this and talking to all the market participants and going public with the things that we wanted to do, we saw a lot of demand for other services as well. So as of today, we are rebuilding the bank to become a full service provider, which means we will then be able to connect all those three modules that I mentioned before: tokenization, custody solutions, payment solutions, and as a fourth pillar, there will also be a token sales platform that we plan to launch end of this year.
Thanks. I think it's very interesting because you mentioned some of your pain points with intermediaries, slowing down execution. And Paul, I'd like to turn to you because I know from my own experience of dealing with the leveraged loan market, in particular, settlement and trading or settlement of trades can get very long dated. So I was wondering if you could share some of your experiences of your pain points and also potentially where tokenization could help improve that business for you.
Yeah, sure. First thing, there is quite a bit of pain in trading loans, unnecessary pain. So I think that's obviously what we're trying to make everyone's life easier here. And just to kind of frame the discussion, you know, loans, to state the obvious, is not a security and it doesn't trade through an exchange. It's an OTC product. But, you know, as a whole market, it's effectively doubled in terms of size since the GFC. So now if you talk about specifically what I focus on, leverage loans, which are widely syndicated to institutions and other banks from the underwriter, you're talking about a market of over $4 trillion now. So it's a significant chunk of the capital markets. And if you had like a billion size euro loan, that might go to 300, 400 institutions. obviously piece by piece. So it's definitely something that needs more formulaic and a bit more of a belt and braces process. What happens at the moment is it's a very, very manual process. And by that, I mean, literally, it can be a voice trade, and then it would go to an agency team that would check the transfer, and it would almost, if you almost want to think of someone with a rubber stamp, stamping it and then sending it off, it is almost like that, frankly. So the real pain points mean, because of that manual process, the lack of loans don't have an ISIN, so we don't have that kind of central market identifier. There are identifiers, and I think what you, Michael, and the team are doing here is a great start to try and standardize that across the piece there, and that would go down to leverage corporate loans like I'm talking about, but it could be obviously bilateral loans to SME, or it could be a whole range of obviously bespoke loans along the way once you actually get maybe the institutional market correct. Because of this process, you have very elongated settlement times. So in Europe, the settlement time is T+7, and in T+10, sorry, and in the US it's T+7 in the US and T+10 in Europe. But what ordinarily happens is the settlement period is delayed, cash settlement, and that's because of this manual process, KYC checks, people having to check docs. So ordinarily, as a fund manager now, if I sold a European leverage loan today, I probably wouldn't get my cash for about T+22, which obviously is a significant drag on your ability to deploy that cash. You don't have it physically. You clearly have counterparty risk, arguably, if you're facing a broker, or and there's market risk. A trade is a trade; it'll stand together, but you can't then kind of dip into the market. So there's the cash settlement is something that a lot of people have looked at in the past, and I think they're going about it the wrong way. They're trying to encourage the old system to speed up. I think it needs something like what we're looking at here with Bitbond, to actually have an identifier, everyone can see it, quickly reference it, and then move on. Also, there's been a lot of not always wholesalely positive news in the mainstream financial press about the market I focus on. And I think that's derived from, some of it's valid, frankly. We've had quite a credit cycle up until recent times in the last kind of 5+ years. But actually, a lot of the central bank and mainstream press commentary has come about because there's lack of observability of the market. And that's because it's quite hard to analyze the data on some of the loan markets. A lot of it's behind the scenes, private. There's not a token that you can kind of reference and drive big data analysis. And so where people can't see data and output, they tend to get a little bit nervous. So I think on multiple levels, there's pain points there that we could really work to. And frankly, it's so behind the curve, I'd say, to some other markets, that it's right for what you're proposing in with this platform.
Great. Thanks very much, Paul. Rose, so when leading up to the call, we had a discussion, and actually I've heard a very similar story from a lot of corporate issuers, a lot of organizations trying to go to the markets, especially during the Corona crisis. And either roadshows got canceled, issuance got cut short, investors pulled back. I had one discussion with one banker about an M&A transaction they were working on for 2 years, that they pulled a force majeure clause and it didn't go through. So I think it'd be helpful for us to understand. You experienced, basically a roadshow stopping because of the Corona outbreak, and maybe you could explain what a roadshow is, because I think people, half the people on the call probably have an idea, but it would still be helpful to hear what that is. I know you're an experienced investment banker, so it'd be great to hear that. And then also, do you think, considering the current pandemic we're in, will there be a need for roadshows in the future? Is there a way to bridge this through a digital gap? So,
yeah, I think we're I think we're changing the norms. I think this pandemic is bringing about a whole new sets of norms out there. As I mentioned, IQ International is listed on the regulated market on the Frankfurt Exchange. Please go to our website, iqint.com, for more information. We just recently uplisted from Berlin, and we have a battery factory in Italy that we're in the process of upfitting with our technologies that reduce electricity by 25% of traditional battery factories. We use 90% less water than traditional battery factories. We have 50% less working capital than traditional battery factories. So we're in the process of really changing the battery space and the battery making space with our technologies. And with Corona, it really did set us back, because we were working with an investment bank, Hauck, and in Frankfurt. It's one of the leading investment banks in Frankfurt that is involved in our space. And right after our uplisting from Berlin to Frankfurt in December of 2019, we were going to go on a roadshow in February, March, and to raise our equity and provide a roadshow and institutional discussions and institutional raise regarding our stock. So with the coronavirus, that really set that off. But back to your question about what is a roadshow, it's a rodeo that corporations go through, that basically you have an investment bank that represents you, and you visit a lot of institutional investors. They're usually vetted by your investment bank, and you have meetings in large conference rooms and do a presentation and talk about your strategy, talk about your financials, and talk about why you're raising the money that you're raising and what you're going to use it for. So it's pretty much the same in all the different markets. I mean, it would be the same in New York as it would be in the UK, as it would be in Frankfurt. But that's what corporations have to go through when they're publicly traded, in order to inform the market of what they do and what they're planning to do. Being a publicly traded company is very challenging. We have lots of rules we follow, and so we have to be very careful about the information that we share. Our planned roadshow was canceled because of the coronavirus, because traditionally roadshows are done, like I said, visiting these institutional investors and groups and going around and informing them and having information and providing that information. So having a new norm for a roadshow would be something really interesting.
Picking up on that. So obviously there's a certain element of trust, because you're sitting across from someone who's potentially going to be investing millions into your business. And I guess the question is, can we replace that element of trust across the board? But in this situation, and I feel free to anyone else in the panel to chime in on this, can we replace that element of trust, knowing that it brings us greater speed to market? Be interested to hear your thoughts and anyone else's thoughts on the panel.
Yeah, I was going to just chip in. I mean, from my perspective, and quite a lot of the documentation, there's a requirement to have some sort of presentation, whether that's a webinar or something physical, or normally it's something physical as ability to join it electronically. And then actually every 12 months, there's a requirement to have a meeting where they update their results, maybe talk about their forecast and strategy. And I think people like that. It's a touch point. I mean, it's beneficial on both sides. Management want to see the investor base and interact with them, get a pulse, as well as obviously investors want to work with and sometimes, scrutinize what management are doing. So I don't think that actual exchange will change at all, I think people find it very useful. Maybe the underlying format, maybe we don't all fly to New York for something or whatever, but I think that actual concept will remain, and it's pretty critical. And when we talk to our investors who fund our funds that then obviously we deploy, one of the things we say is we've either met them over a screen and we know them personally by name, and we're able to talk to the management team directly, or in some cases the private equity sponsors and some of the deals that I deal with, or you've been physically met them. So I think that's quite a key element of investing, frankly.
Yeah, I would totally agree with you, Paul. When it comes to investing, maybe just from our perspective, as a bank that provides services by setting up structures, I can only say that we have actually increased electronic sales that we saw in the last couple of weeks for our digital banking division, and the traditional divisions were a bit less. So. It depends on the means of sales. I think it's still to go to larger institutions, to institutional investors, and solely selling a product through digital channels. But we increasingly see that some of them are changing their mindset. So, and I think this is a great thing for all of us, because we will gain speed, we will gain traction, and shorten the time to markets.
That's a great point. And so I think we can all agree that at least overnight, there won't be an adoption or a transfer to a fully digital platform when going to the market, either in the debt or equity space. But there are certain efficiencies that tokenization would create. And Philipp, you as the banker on the panel, maybe you could tell us what you see as some of the benefits of that you see for tokenization in your business and generally in banking.
Yeah, sorry, I just deactivated my cam. Now I'm back on. Yeah, the benefits for us, I think it's pretty clear for us. We see it as tokenization as a very efficient way to restructure our back office and settlement processes. So as I mentioned before, we already have to rely on other parties when we settle securities, an issue that Paul also described on his side. And for us, it is very crucial to reduce those settlement times. Usually the end investor doesn't see or doesn't even realize that those processes are in place, but there's a lot of risk involved, settlements, payments that are not being settled, banks that need to connect themselves in the first place, which takes a lot of time. And then, of course, this is the one issue when you settle trades. The other issue is if you as I mentioned before, plan to issue new securities to the market, then there's also a lot of action going on between those parties, and you simply reduce the time. So it's, to sum it up, it's leaner processes, it's a short time to market, and of course, it's less fees.
Great. So taking on that, or following up from that, I think, Paul, you mentioned earlier that traditionally settlement processes should be 7 days in the US and 10 days in Europe, but are taking on average 22 days. So what's actually slowing down that process? Because it's something, I mean, loan trading isn't something we've just created. And everyone's using more and more technology. I know I mean, when I was a banker, there actually were cases where you needed a physical signature, a rubber stamp, and it needed to be delivered documents. So what's actually slowing down that process?
Well, I mean, it's surprising that it has remained such a kind of clunky, if I could use that word, process. Because if you think about, probably in Europe, of syndicated leveraged loans, probably about 750 million trades a day. And in the US, it's probably close to 2 billion a day trades. So, you know, the fact that this is still manual is astounding. And I think I alluded to previously was was the very manual nature of it. There's also, it's still very document heavy, and so there is a lot of checks and balances with documents that could be streamlined through something like tokenization. Also, the loan market would say in its defense, it has a stronger KYC requirements than maybe some other markets. I don't quite buy that myself. I think there is strong KYC within the loan market, but I don't think that should be used as an excuse. One thing that is very valid that does slow it down, which is different to a bond market, is there are white and black lists, which, as the name might suggest, are driven by the sponsor normally, or the corporate, who may want to control who is or is not in their syndicate. So that is something that would require a check and a valid check. But I think, Michael, you were saying on some pieces I was reading that the Bitbond is able to have that kind of feature where you can turn on and off that sort of process. So it's just streamlining the manual process. I think from an overall governance point of view, as I said, we don't go through a clearinghouse. So in the US, it's an institution called the LTSA, and in Europe, the LMA, Loan Market Association, that govern the trading of loans. And it's a framework that they provide. And that framework, you know, I'm old enough to kind of say 20 plus years experience, you know, it hasn't really changed in the 20 years I've been doing it. So it is pretty ripe. And when you go to, when we were allowed to go to conferences, people always talk about the settlement times, clunking up the market. You know, if you and I, Michael, have traded something, and you know, what happens is on that, so we're trading something and you're at T plus 10, I actually start to get the economics as if I did own it from T plus 10, but the cash might not come for a while. But obviously it's a multiplier effect. If you then trade around, you know, everyone else on this call, all that backup of cash has quite a significant effect. So if you take a step back, you could argue it's not servicing investors as well as it should do, or pension funds, because you have this kind of trapped cash in a way that's kind of sitting in the system. So yeah, it's ripe for, I know disruption's a bit of a kind of vogue word, but maybe streamlining and disruption. But yeah, it's unnecessarily manual, frankly.
Thanks. That definitely helps explain what's going on. I guess we want to save 10 minutes at the end for questions. So I want to turn one of our final topics, which is, and Rose, I'm going to start with you. What do you think is the key issue that needs to be addressed to see tokenization adopted more quickly and widely? Taking into account, I think we all agree here from this conversation that, and we believe this also at Bitbond, we're not here to replace banks. We're here to make banks better, to make processes better, to provide technology so bankers can be more focused on what they can do significantly better, and in fact, issuers and intermediaries can be more efficient on what they do and let them do it better. So what would you say would be the key issue that needs to be addressed to see tokenization adopted more quickly and widely, seeing that we all understand that there are benefits that come from blockchain-based digital assets? Rose, I'll let you start on that one, but everyone's going to get that question, so be thinking of your answer.
Well, let's see. Oh, good. You were able to unmute me. I appreciate that. The most important part for an issuer and for a corporation is speed to market. I mean, you know, companies that are going out there and looking for money, they want to be able to, you know, get that cash. There's just such a long time to raising capital that I think speed to market is for us as a issuer is most important. And I see this as a process of providing some level of efficiency as well as an alternative to the traditional methods. I mean, it's not going to be something to replace. Eventually, I would imagine in my kids' time, in future generations, it could replace parts of the traditional methods. But right now, I think it's in the alternative space, and I think it's accessing, wider markets. It's ease of use, it's speed, and it's really digitization of a clunky process.
Okay.
I
Paul,
hope that answered the question.
that was great. That was absolutely great.
I'll go on the other side. I think that, as Rose was saying, that's a lot of the solutions or what needs to be solved, what needs to be addressed. I think if I could just maybe go at it from that side, it'll obviously, to state the obvious, it'll require buy-in from corporate issuers like Rose and underwriters and investors. And I think that is something that has, I know, Michael, you've been doing it. It requires just explanation. I think, like you say, it augments basically everyone's process. There's not something that requires wholesale change. It will mean embedding in systems that are already there and processes that are already there to kind of streamline it and make it everyone's life easier. So I think it might be quite a manual go-around process. I was going to say, Michael, you getting on a plane, but you getting on a Zoom call a lot to kind of speak to respective institutions in these current times. And I guess the kind of hook, if you want to think about it, is if there was one identifier, I can just think about what I've got in front of me post this call, and a lot of it is to do with the fact that I can't say there's one identifier I can say to my middle office operations, and I can talk to my execution traders, and we're having to have multiple conversations. So I think if you could say, look, I can have one identifier to someone like Aberdeen Standard, and that would cut down your chats away from kind of the day-to-day investment and normal business, then I think that would be quite powerful. But yeah, I think initially for buy-in, it will be a bit of a manual process and arm around the shoulder and showing institutions how it can really help.
So, Philip, your turn. Do you remember the question?
I remember the question. I think it was about key issues, right? So from our perspective, it's a bit like Paul already mentioned that. I mean, we need to have the institutional investors. We need to enable them the tokens. And as of now, we have a bit of legal and regulatory framework that helps, but we would need to see a lot more clarification, a lot of additional framework for them. Investors that fall under Solvency II or German Anlageverordnung or parties like that, they don't know how to invest these days, and it's quite tricky for them actually. So I think clarification, additional legal and regulatory framework from our perspective will enhance tokenization in the future.
So I would like to turn, and Rotko, you're allowed to come in on this as well. We're going to turn to questions that we've gotten from the audience during the presentation. I always like to leave, because very often those are questions that aren't covered during the presentation. So first one, it's a crystal ball question, as I like to call it. What role will major banks take in the issuance of securities in 2025, relating, of course, obviously to tokenization and the use of blockchain? What role will major banks have in the future? So five-year outlook. And I would start with Paul. And
yeah, I think they'll, as they are today, and arguably, maybe to Rose's point, 15 minutes ago, speed to market, maybe you'll have more issuance, actually more frequency, and corporates are able to be more nimble into the capital market. So I think I don't see any diminution of banks' role. What they'll obviously have is different tools, which is what we're talking about here, which can only be a good thing to access the data, capital markets be informed, the corporate feels more comfortable executing in the market, and the bank feels more comfortable underwriting. So I wouldn't see, if we went full tokenization tomorrow, 9 a.m., that there would be difference other than people's lives would be easier. Obviously, it would be a better system, but in terms of banks' roles to the question, I don't really see that changing that hugely in that new process.
Yeah, I would totally agree. Maybe just to add a few lines, I would totally agree with Paul on that. I think what we experienced already today is that especially institutional investors are looking for trusted parties in this process, even though the system is designed not to need them anymore, but still they're investing their money, and they are happily looking for banks that are able to help them navigate. And I think if we take a look 5 years from now on to the future, then of course the major banks will play a very important role, and they will be there and just use different technology. That's my opinion.
Rose, what do you think?
I think the larger banks are always looking for a high level of assurances and risk reduction. It's, you know, for them, it's just, you know, it'll take some time for them to adopt. So that's my prediction. As an issuer, we use different banks for different things. And, you know, you have banks for your treasury function, and then you have your banks for your equipment financing, and you have banks for different activities. So the big banks, I think, will come around to it, but I think it'll take some time.
Okay, there's a question.
Well,
sorry, go ahead.
Just to add a little bit. You know, I sit amongst a team that we do both bonds and loans, and quite often from the same issuer, and they'll do one or the other, or they'll do both. And quite a lot of the discussion, particularly in recent times, given the market is volatile at the moment, but even actually pre-COVID-19, that your ability to have visibility and execution in the market is absolutely critical to a corporate issuer. And sometimes they'll go our bond route, even though actually they may prefer the loan product, because they know the point to point is much quicker, and I can't take a 3-4 week view on the market. And we've seen it recently, obviously, you know, March and April, tale of two halves. So I think anything that could compress that timetable for people like Rose would give them more confidence in those underlying products to execute. It's absolutely critical to, I think, to corporate issuance at the moment.
Great. Next question, Rose, you can start us off with this one. What would be the first steps for, and Ratko, please feel free to join in. What would be the first steps for a company in the EU looking for tokenization and to issue securities? First steps for a company in the EU looking for tokenization and to issue securities. Oh, there you go. Go ahead.
Thanks. I think the most important thing is to find the right representative. Just like we hire an investment bank to help us and guide companies to the necessary structures that we need and the uses that we need. I think having more investment banking type of organizations or advisory type of organizations helping corporations would probably be the best way to start with that process. I don't is jumping in all by themselves. I think it's gonna take some work and guidance to get companies comfortable.
Okay, Philip or Paul, any thoughts on that?
Yeah, I was going to say that they have to call us. I mean, we can help.
You're my next call.
Perfect. No, I totally agree. So, yeah, you need someone to help you, even though. Sorry, Paul. You need someone to help you with the whole legal stuff, drawing up prospectuses, doing the investors roadshows and stuff like that. It doesn't change, even though you're using a different system. So you need to help someone.
Echo that. I was going to say, actually, I think we can talk about lots of things conceptually, but to actually do it is obviously going to get more. You're always going to have some early leaders, and then once a few, and there are a few instances of kind of, as we talked, kind of blockchain syndicated loans, but a little bit sporadic. But as that increases, I think that will draw more confidence, because some people and some institutions strategy or behavior is like that. They won't want to be the first leader. And maybe Rose touched on it when she said about banks, big bank that. So I think to kind of move forward and do it is probably the, you know, is probably the best action, and then you will draw more interest, I think.
Just one complementing remark. At the end of the day, what you have is a buy decision, and normally it helps to involve experts such as Philipp and other market participants to get started. The technology is a new one, and I believe your investment product, because you have shorter settlement times and you're having a lot of efficiency gains. However, at the same time, as an issuer, you would normally have your field of expertise and your industry that you're good in, where you make your revenue. And when it comes to financing, you will still turn to experts to help you out with that. And some of these people today on the panel would probably be the first ones to talk to.
Great. So next question, we'll start with Philipp on this one. Since Stellar, that's the Stellar protocol, or the type of blockchain that Bitbond typically utilizes, but it's not the only one, but it's typically what we're utilizing. What's the panel's opinion on launching a token on Stellar? And Philipp, I'll let you start with that one.
Sure. For us, from a bank's perspective, I think we like Stellar due to the fact that you have certain functions that, especially security and compliance functions, that help you when launching financial instruments. But as you already mentioned, Michael, it's not the only technology that you guys, or also we, are not limited to using Stellar blockchain. We are also issuing or planning on issuing securities on Ethereum, for example. And I think with those two covered, I know there are bits of this discussion is always going on, which one is the better technology. So for us, as someone who wants to facilitate digital assets and token issuance, we are going to use both technologies.
A bit more of a technical question, so I'm not gonna hold your feet to the fire on that one. Rotko, you have any thoughts you'd like to add there?
Yeah, very happy to. So obviously on the side of the protocol, we are, as a technology partner and as a technology provider, continuously observing the market and observing which technologies, especially from the perspective of tokenization, are the ones that serve the use cases best. Because at the end of the day, the decision for a particular protocol is similar to buying other types of technologies. You look at your use case, at your requirements, and then you compare that with the features and properties that some of these technologies have. And when it comes to tokenization, tokenization from a technical standpoint is a relatively narrow use case, which at the same time requires an extremely high level of reliability. When it comes to settlement, ideally you have very low settlement costs, so the network fees are something that play a role, especially when you have financial instruments that are catering to retail investors, where you volumes, but also a high frequency of transactions and a high number of investors. And in that area, as of today, we prefer to recommend Stellar due to the fact that it's extremely scalable and the technology is very highly customized for tokenization. While if you look at protocols like Ethereum or Tezos or EOS, These protocols are mainly developed to be platforms for what you could call a decentralized computer, where decentralized applications can be run on top of. And decentralized applications, of course, have a completely different set of requirements towards the underlying protocol than when you want to tokenize financial instruments. So it's use case specific, and these are just a very few of the factors that play a role when making that decision on a protocol. There's plenty of other factors, and it's something that you need to evaluate continuously. And maybe in 5 or 10 years from now, other protocols will have emerged, or some of the existing protocols will have network upgrades in the meantime and will kind of change their direction, or will be better suited for some of the use cases that are out there. So technology is continuously evolving, and this is something that you always need to observe and consider all the factors that are relevant for your use case. But again, coming back to the specific use case of tokenization, a few protocols, and Stellar is probably one of the best ones, and they are better suited than some of the others that are focusing on becoming platforms for so-called decentralized applications.
Okay, thanks. I think we're going to try to squeeze in one more question. It's a lessons learned question. I think it's focused on the BB1 token. But if anyone has any other experiences related to blockchain, I would encapsulate that in the question as well. Question is, what has been the road so far, and what has been the experience with the issuance of the Bitbond BB1 token? And if you were doing it now, what would you do differently? I have an idea what you would say, Ratko, but I'd still like to hear from the horse's mouth, as they say, and feel free to anyone else to jump in there.
Yeah, thank you very much. So it's been around about a year since we've issued the BB1 token, which is the tokenized bond that we issued last year. And we've learned a tremendous amount of knowledge since then. And a lot of that actually flows into the cooperation that we have with institutions like Bankhaus and some other intermediaries and banks. And I would just highlight 1 or 2 points in order not to turn this into a too long monologue, because after that, we should be wrapping up this panel. One thing that we've learned is that when you want to get institutional investors into tokenization, the question of custody is actually extremely important. We've been catering primarily to retail investors, and probably the majority of the investors token are tech-savvy people who feel comfortable with basically taking care of their own tokens and doing self-custody in a consumer-type wallet. However, this is something that institutional investors will not do, even cannot do due to compliance reasons. And so bringing in a regulated custodian like a bank, like Bankhaus, which just recently launched their custody solution, is extremely important to the adoption in the institutional markets. And I personally believe that tokenization as a phenomenon will only get to the scale and to the relevance that we believe it will have if it will be adopted in the institutional markets. So this is one core learning that we've gained from our issuance. And maybe the second one that I would like to highlight is the question of on-chain payments. At Bitbond, we have decided to pay out coupons and the repayment of the BB1 token with the native cryptocurrency on top of the Stellar protocol, which are Stellar Lumens. This has a lot of very nice practical features attached to it. At every coupon payment date, we can simply check from the Stellar ledger which addresses are holding the BB1 token, and we can very easily pay out the coupon on a pro rata basis to all of the token holders, literally within a few minutes. So there's a high level of convenience, but at the same time, the investors are getting a cryptocurrency into their wallet, which is volatile. Stellar Lumens have pretty much a similar volatility like Bitcoin or any other of the big cryptocurrencies. And so if an investor receives the Lumens and they want to make sure that the value remains stable, they would need to sell those Lumens in an exchange to euros, for example. And this is, of course, something that also for retail investors might be okay, but in the institutional world, this is something that would not be acceptable. So it means that you need a euro-denominated token, a stable coin, through which you can conduct payments. And I think this will be one of the key components next to custody for adoption in the institutional markets for tokenization.
I think on that note, I'd like to thank all the panelists for participating and giving their valuable time, and it's very much appreciated that you participated in our web event. I would turn the floor back over to Rotko for the last word, and I'd like to thank everyone for dialing in and making this such a great event.
Thank you.
Yeah, thank you, Rose, Paul, and Philip. It's been a pleasure to have you on our panel, and I have to say I wasn't really sure how such an online event would turn out, but I hope that all the participants that joined us today, and it was actually over 80 people, hugely successful in the turnout, would join me in saying that it was excited to listen to all of you and to get the different perspectives on tokenization, on the general development that we see in financial services like the securitization market, the loan market, credit markets, perspective of an issuer. And I hope that we, at some point, rather sooner than later, will be able to continue this conversation, to discuss further use cases, further experiences in person when we get the opportunity to invite all of you to Berlin. But until now, we just want to thank everybody for participating and looking forward to staying in touch with all of you as soon as we can. Thank you very much.
Thank you.
Stay well.
Bye.
Bye-bye.
Thank you.
Be well.
Take care.